There are two clocks ticking on Wall Street. The first clock is human. It is methodical. It is deliberate. It is often slow. This is the clock of the traditional analyst, who pores over quarterly earnings reports and crafts detailed, thoughtful research papers. By the time their report is published, announcing a stock as a buy, the opportunity has often already peaked. The smart money moved weeks ago. The second clock is digital. It is relentless. It is immediate. It measures time in milliseconds. This is the clock of artificial intelligence. It processes information not after the fact, but as it happens. News, social media conversations, shipping manifests, satellite images are all data points it consumes in real time. The first clock tells you what has happened. The second clock gives you a glimpse of what is happening now. For the individual investor in 2026, understanding this difference is the key to unlocking an entirely new class of opportunities. The traditional game involved waiting for the gatekeepers of information, the analysts and major news outlets, to signal a move. That game is over. Today, the raw signals that precede those reports are openly available, flowing across the internet in a torrent too vast for any human team to handle. While a human analyst is reading one company's financial filings, an AI is scanning millions of data points across thousands of companies. Traditional investment analysis is built on two solid pillars: fundamental analysis, technical analysis. Fundamental analysis is the art of business valuation. Deep dive into a company's financial health, revenue, earnings, debt, cash flow. Technical analysis ignores the business and focuses on price charts, volume charts, and historical patterns. Both methods created immense wealth and remain valuable. But in 2026, they are like trying to drink from a fire hose with a teacup. They were designed for limited data and leave value on the table. The core problem: data overload. An analyst reads a 100-page 10K, valuable but slow. While they read, millions of data points appear online. Customer reviews, employee profile updates, supply chain forum posts, satellite data on factory activity. Each is a small signal, a piece of the puzzle. Traditional methods can't gather, process, and connect these disparate dots. They analyze small sets of backward-looking docs and lag reality. Financial news now adds confusion. 24-hour news cycle, social media echo chamber. Sensationalized headlines repeat. Rumors spread like wildfire. Human teams, prone to narrative bias and emotion, struggle to tell signal from noise. They chase exciting or popular stories, not always data-backed ones. That creates a gap between reports and on-ground reality, a gap nimble data-driven systems can exploit. It's not an indictment of analysts, but of their tools. They're looking at the same map while the landscape changed. Markets are complex adaptive systems reacting to global info in real time. Large funds use sophisticated algorithms and high-speed feeds to act in microseconds. The good news: tools to level the field are becoming more accessible. Breakout stocks of 2026 won't be found only in SEC filings. They'll be found in patterns hidden in the global data stream. This is not a story about magic or a mythical black box that perfectly predicts the future. It is far simpler and more practical. The goal is not to replace human judgment, but to augment it. Your intuition, your understanding of a business, and your risk tolerance are still paramount. However, relying solely on old methods is like trying to navigate a superhighway with a horse and buggy. The world has accelerated, and the data landscape has expanded exponentially. The investors who will find the breakout stocks of tomorrow are not the ones who work the hardest in the old way, but the ones who smartly leverage new tools to work faster. It is about being the first to hear the digital whispers, long before they become the roars that everyone on Wall Street can hear. Artificial intelligence brings three transformative capabilities to the modern investor: scale, speed, the ability to detect novel signals. Think of AI as an army of 1 million interns who can read, categorize, report back on every piece of public information on the planet, all at once and without getting tired. It can ingest a fire hose of data from news articles, social media platforms, academic papers, patent filings, corporate communications every single day. This sheer volume allows it to spot trends at a sector-wide level, global level, identifying industries gaining momentum before it becomes common knowledge. The second advantage is speed. AI operates on the clock of the machine, not the human. It can score the sentiment of a CEO's interview the second it is transcribed. It can detect an unusual spike in shipping activity the day it happens. Instead of reading an analyst report that says sales are up, you can get an alert from credit card transaction data suggesting sales are trending upward, weeks before official numbers. This is moving from reactive to proactive investing. Perhaps the most profound advantage is AI's ability to find new signals, digital breadcrumbs that precede major business events. For example, it can spot a rise in job postings for AI engineers and an increase in patent filings related to automation, then correlate them. An AI trained to find leading indicators would flag it immediately. We are drawn to compelling stories, charismatic leaders, media darlings. AI is agnostic. It follows the data, not the narrative. It can test a hypothesis across millions of data points without emotion, counterbalancing our cognitive biases. One of the most powerful and accessible AI-driven strategies is sentiment analysis. It reads vast text and classifies emotion as positive, negative, neutral. Think of it as a global focus group that runs 24/7. Public opinion about a company, its products, its leadership often shifts before its stock price does. A groundswell of customer complaints or a surge of viral praise can be a leading indicator of future earnings surprises. Before AI, capturing sentiment was anecdotal and unreliable. Now it can be measured and tracked with mathematical precision, providing a tangible edge. Use a tool that tracks sentiment scores for your watch list. You are not just looking for a high positive score. You are looking for the rate of change. Set alerts when positive mentions jump sharply. Use that alert as a trigger for deeper investigation. Strategy 2. Predictive patterns hidden in plain sight. This strategy moves from words to numbers. History may not repeat, but it rhymes. Certain sequences of price and volume can precede significant upward or downward moves. Humans look for head and shoulders, golden crosses. The human eye knows a small library. AI can test millions of complex, multivariable patterns across thousands of stocks automatically. Before a breakout, you might see very low volatility, then a slight increase in volume on up days, then another quiet period. A footprint of accumulation by informed investors. A human might miss this nuance. An AI model flags it instantly. You do not need to be a data scientist. Use AI screeners with pre-built pattern libraries and backtests. Focus on hit rate and average return. A pattern correct 60% of the time, with outsized wins, can be highly profitable over the long run. Use it as a data-driven starting point, not a command to buy. Strategy 3. The macro scan. Finding ripples before the wave. Zoom out from companies to the economic landscape. Use AI to analyze alternative data sets to identify sector-wide trends before prices reflect them. The market ties to shipping, manufacturing, hiring, consumer spending. See the ripple and know the ship is coming, long before you can see it. Semis surge first show as cargo bookings for components, job postings for engineers in Taiwan, rising prices for fabrication inputs. Faint alone, decisive together. An AI synthesizing shipping, labor, and commodity data can conclude demand is accelerating, letting you position before blockbuster earnings. Use platforms that integrate alternative data and find predictive correlations. If imports from fast fashion brands jump and social mentions spike, supply chain plus social signals a demand surge. You can target leading niche names or logistics firms before mainstream coverage catches on. Section 7. Getting started. Your AI toolkit and first steps. Embracing these AI strategies does not require a degree or the resources of a hedge fund. Retail-focused AI tools have matured into simple subscriptions. They package advanced models into dashboards, screeners, and alerts. Start with a free trial. Look for AI sentiment platforms that score and trend by ticker with drill down, predictive pattern screeners with transparent backtests, macro data platforms integrating shipping, trade, and employment to spot sector trends. Create a watch list of companies you know. Configure alerts for sentiment spikes, high probability patterns, and relevant macro signals. When alerted, investigate. Don't buy blindly. Paper trade and log outcomes to refine rules. While AI offers a powerful new lens, approach with caution. AI is a tool, not a crystal ball. It identifies probabilities, not certainties. Beware false positives, bot-driven chatter, misinformation, or patterns that fail in new regimes. Treat signals as a starting point for diligence, not a final buy order. Overfitting can dazzle in backtests and fail live. Favor transparent methodologies and continuously retrained models. Avoid promises of guaranteed returns. Diversify. Don't over-allocate to any single idea. Use position sizing. Set exit points for profits and losses before you enter a trade. The aim is to increase odds over time, not win every trade. We stand at a fascinating juncture in 2026. The advantage now belongs to those who can process the vast ocean of public data. See a surge in product sentiment. Detect a subtle accumulation pattern. Spot a nascent supply chain trend before consensus forms. Upgrade your map to GPS. Pick one strategy, one tool, 5 stocks, 30 days. What is the riskiest stock you have ever owned? Share it below and subscribe to Profit Pulse.